What is going on? What is going on? Chat, Real Deal Futures, Discord, team, family, friends, enemies, haters, traders, whatever I'm supposed to call you guys. What's happening, man? Happy Monday. Back at it again with another live stream. Damn, Daniel. Back at it again with another live trading stream. Here on, this is actually the micro chart here on ES looking at S&P futures. I actually have a trade running here this afternoon. Usually not starting the live with a trade open, but I am today. I've got the 5-minute chart and the 100-tick chart up. I'll talk a little bit about that today. I'm building off of Dakota from Coach Dakota from TopstepX live stream, #1 trader using the 100-tick chart. I've been playing around with it. I like it, man. I'm testing it today. Tested it a little bit last week. Not too far off of a time-based chart, similar candlestick deal, but definitely some differences that I like. It's something I looked at in the past, just wasn't available through any of the brokers that I used or TradingView, even the paid TradingView subscriptions. So it's on TopstepX. It's the only way that I've found I can get it without paying an exorbitant amount of money for it. So it's pretty cool. But right now I have a trade running, as you can see, in a little bit of profit. Not looking amazing with the hesitation down here around pre-market low. Again, this is the 5-minute chart. This is the 100-tick chart. It's a fairly zoomed-in view, closer to the 1-minute chart. If you zoom out, actually, I need to zoom out so I can fix this VWAP line, and need to zoom out on this one so we can fix the VWAP line. TopstepX, for some reason, if you're zoomed in too much, you don't kind of zoom out and scroll back. Doesn't take the, I think it doesn't take the volume and apply it to the VWAP line that is running down here. But as you can see, what happened for NYSE session, we'll do a little bit of that. I'll talk about this trade real quick. I took a couple trades this morning. As you can see, a little bit of drawdown right now on this account. Even with this trade running, I'm about $250, $200 maybe in drawdown on this account, which is chained to other Top Step combines, 50K combines. But we came up. I got short, looking for this to come back down into the range. Just didn't see this extension, this breakout following through. Saw we have now been finding some resistance at the pre-market high level. I don't really love this. I'm going to let the trade run for right now. I'll see what happens if we start trending back up towards these highs. I'll probably be in trouble on this trade. This amount will hit the daily loss limit for this account, or these accounts, I should say. But I'm trading these pretty aggressively. I have way too many Top Step 50K combines held over from that $19 deal, and they are getting ready to rebuild. So you're going to see some passing or failing coming up here of some Top Step combines. But got another XFA, got a XFA running on Friday. That was pretty cool. Got the pass on that one. Nice to get one under the belt. It was sweet to get the little certificate. Top Step really hypes you up on that. It's pretty cool. But I've got a number of other ones that I'm working on, and that's my game plan. Continue to trade combines, stack XFAs, and then trade some XFAs whenever I feel fit. But right now, I've got fresh combines that I haven't even gotten to, so I'm working on that for the foreseeable future. But again, yeah, we're in this trade, looking short, looking for really price just to come back down into this into this area of structure, this prior high, kind of high in the pre-market zone that we've broken out from. We are finding some support here and pushing back up, so I don't love this. This looked nice, like we're going to see some continuation to the downside. Even on the 5-minute chart, we tested it right here. I felt if we were going to move higher, here's was its chance to, but it looks like it's going to come and take me out of the trade here. So you guys will see you'll see a loss, you'll see a daily loss limit hit if it does indeed come up there, and this will be my trade for this session. So we'll get it done nice and early. If not, we continue down. We'll come back down into this range. Maybe we'll get a nice win out of it. Didn't scale out, didn't go stop loss to break even, didn't reduce any risk. Wanted to give this thing some room to breathe in case it needs to do something like this. But again, after this consolidation and then push higher, I really just don't love the way this looks anymore. I was liking the way it looked after it tested, pushed back up. We had this really nice long wick doji on the 5-minute, push immediately back up, and then failure and continuation lower. We're really just now starting to break this really nice clean downtrend structure. But I'm going to give this thing a little bit of room to breathe, like I said, and hold my trades for the winners. A little bit more than a 1-to-1 is all I'm shooting for on here. Nothing crazy. Quite a bit of risk if I was looking at things objectively on a 50K account. $500 or more of risk per trade does not give you a lot of losses before you blow the combine. It gives you 4 or less. Again, I'm getting aggressive with them. That's the at least on the risk side, not so much on the taking 1,000 trades side, but that's the approach that I'm taking at the moment. Kind of just staring at the chart, deciding if I want to manage this, but as of right now, I'm not going to. If this push continues, we see follow through with this, it's going to come and take me out, and we'll have some nice trading discussion here, and that will be that. I'm not going to jump right to another combine and start trading it after the daily loss limit. This will be the first one in a number of weeks where I actually hit a. Oh, it's not true. I had overnight trades hit daily loss limits because I put $1,000 of risk on, but this would be a loss for sure. And I would manage my my risk by cutting myself. Manage my risk by all across all the accounts by cutting myself off, not taking any more trades. But what's up? What's up? What's up? Hello. Grateful Trader. Arthur, what's up, my man? Relaxing Zen, what's going on? Everybody in their fun.
Order
there
filled.
we go. There we go, people. Here's what real trading looks like. Daily loss limit hit. Stop out. On 3, because this is 3 of them daisy chained together. Pushed all the way back up. Didn't even get to hit my stop loss. Took me out before the highs. I have my stop loss right here. It would be pretty frustrating if I was just in too heavy, if it doesn't come up and hit this level where my stop loss was. But that's just part of the game. You know, we're not going to cry about that. Again, unfortunately, the only one that I'm going to take, I was in that one early, so the guys that are on here saw that one live. There you have it. Again, like I said, not going to jump to another combine, going to manage risk. I'll talk about the trades that I took today. Kind of run through that. Long time no see. What's up, man? Talk about that. Talk about any questions you guys have. But yeah, 100-tick chart. I've been liking it, man. So again, if you guys watch any of the Top Step stuff, you'll see one of the guys on there uses a 100-tick chart. I'm really just taking it from him. That was the piqued my interest again in it, and seeing that TopstepX had it. It's not on TradingView. If you go on TradingView, even the paid programs, the only way you can get it, I think, is by purchasing a professional level deal. I've got the highest paid premium membership. I'm not going to pay like another, whatever it is, $500 or $1,000 to have just a tick chart. TopstepX has it for free. It's awesome. It's definitely different. It's not time-based. It's based on the number of ticks that are traded within each candle. So for this chart, 100 ticks traded prints a new candle. So as you can see, when there's areas of low volume, the amount of candles that are printed are less. So it kind of does a cool job of compressing areas of low volume, low volatility, and then it prints more as more trading is done, more volume is done. So it's kind of a cool way to see some momentum, to see maybe a little bit of volume, definitely buying and selling pressure. I've liked it. Again, not too far off of the 1 minute chart as far as like how zoomed in you are. I would say it's a little bit more zoomed in, especially when we get moving fast. Yeah, there we go. Wow, look at this push up. Wow. So the buy off a pre-market high would have been the play, man. Pull back down and then a nice buy off that level. But yeah, again, there's advantages and disadvantages to it. I got a 5-minute chart, which he happens to run as well, sitting by the side. This way you kind of get the higher time frame picture and the more zoomed in picture. I've ran the 1 minute and the 5 minute side by side, a whole bunch of different combinations of charts. Usually I'm right around that 1 minute and 5 minute time frame for what I like for entry. I really prefer the 1 minute so far on the S&P over the 5 minute. It just moves so slow that I think it's nice. You're able to view it on the 1 minute without having losing your mind like you might on NQ. But we'll see. Again, I test things. Sometimes I decide, fairly quickly that I don't like it. I'm gonna stick with this probably for the whole week, at very least. So far, I do like it. It's pretty sweet. You can see structure. You can really see when volume and volatility is coming in. It starts printing again. A lot of candles. You get more candles printed. It's pretty cool. I'm just looking over here to the left. Yeah, this would kind of be the next level before prior day high, really right here. If I was going to draw a zone, and I will. That's what I'll be looking at right here, right off these highs. Nothing special, nothing crazy. We're tapping into that level right now. This looks very bullish, obviously. I'll talk through some of my trades from this morning. We can see how I didn't have a super wonderful trading session. But as promised, and as the name suggests, I'm going to keep it real with you guys. I'm going to show you the wins, the losses, the daily loss limits hit, the max profits hit, and everything else in between. So didn't get involved early on. This was really slow open if you watched NYSE. Fairly slow open. Obviously little volatility that came in at 9:30 a.m. Push to the downside. If I zoom out on the 5 minute, just where the markup was. Our pre-market high was below prior day high, which is marked up here. Our pre-market low was above prior day low. So we're within the range of yesterday, of Friday's candle, that price action that was traded. Little bit of a downtrend, right? Kind of coming down. I would say overall, this is much more of a consolidation, but we were trending down towards pre-market open. Took that into consideration as we were below the VWAP line. I took an aggressive sell right off of this level here. That failed pretty quickly. Wasn't quick enough to flip long, which obviously would have been the play. But again, you can see how the VWAP line comes into play, is used as kind of a dynamic support and resistance. It's a nice way to think about it. We came up to it here, tested it, started to consolidate, looked like we were going to continue down, was really only targeting the pre-market low, understanding that little bit of a range, little bit of consolidation today, no big news events. We're waiting for major red folder stuff on Wednesday. So I'm not looking for a home run here. Looking to take this south. That failed, pushed up. A buy on the retest right here on the 5-minute would have definitely been the play up towards pre-market high. Again, just wasn't quick enough to flip long. Wanted to give this a little bit more time. Maybe if I got to push up in a retest, I would have gotten long on it, but didn't get it, man. That's just the nature of it. But as far as the approach, the strategy, I watch it play out time and time again. You just have to be quick enough to execute. Definitely quick enough flipping from your bias. If you're short and you're stopped out, and price is telling you to get long, you've got to make that move. The second trade that I took was a sell-off of pre-market high. That one failed pretty quick as well. I think I had one more in here somewhere within this price action. And then the last one you guys just saw. Getting short as we were coming back down. Again, looked like we were going to turn and come back down into the range, somewhere towards this VWAP. My target was right off of this high here. Not looking for a whole huge home run. Really, before the VWAP, I believed a very easily achievable target. We found support. We found support right at pre-market high. Again, love these levels. Not when I'm losing and I'm trading on the wrong side of them, but I love to see them work out. Look at how this one played out. You could have literally just bought at this pre-market high level, playing off of the uptrend, and look for this to continue. Again, I got short on this coming back down into this range, which we started to, looked pretty good. As you heard me say, I didn't like the way this was consolidating here. Wanted to give it enough time to just crack up above these highs, maybe kind of come back up here, pick up some steam before continuing back in. Afternoon move is bullish, man. We made our push up. So again, wrong side of the market today, man. I need to stop trying to short U.S. indices. I don't know when I'm gonna just turn into a perma bull. Maybe that's the next following suit of Dakota at TopStep. No, I don't like to be presumed as copying people. But if I see something that is interesting to me, a tool that another trader is using, I don't mind taking a look at it myself. There's a million things out there. Most of the traders that you see didn't invent the tool that they're using. Almost all of them did not. We're using things created by other people. We're studying their use cases, usually that have been explained by other people. So don't have any shame in that. Part of my 5 traders that helped me out video on YouTube was talking about that, utilizing stuff that you learned from other traders, professionals that are doing well. So again, yeah, really bullish move here towards end of day. This now to me looks more likely to continue, right? Like we're not looking bearish. We're not coming back into the zone. This was its chance to come lower. Didn't need to come down to the VWAP line at all. Hardly tapped back into this pre-market high. Really just used it as a really clean support level and then continued up. I know NASDAQ was looking stronger earlier today. Broke above pre-market high somewhere while ES was down around this level, assuming we got the same on that. But yeah, we pushed up hard on this one. Again, man, the more and more L's I take on it's definitely skewed too in my data. On the U.S. indices, the more likely I am just to want to take buys, just in general. It's hard to go short in this market, man. But again, I'm doing the best that I can every day to read price action, market structure, and when I identify some rangy consolidating conditions, I look to trade in between my levels, my zones, my areas of interest. Not shooting for home runs, nothing crazy. Put risk on when it makes sense, and utilize my levels. Just on the wrong side of it today. That's just a fact. Long after this break above would have been solid. I would have taken this L no matter what. I really like the aggressive sells and buys. First thing as VWAP is being tested, if price is below and trending down or above and trending up, I like to see that used as support and resistance. But I've had a handful of sessions where this happened. I flipped long and it played nicely. or vice versa. We sliced through. I was in a buy, took the first L, got short, and played it to the downside. But just didn't have the confidence that this was going to continue today. Thought we might just chop around here, but as you can see, played out really, really beautifully. And looking short was okay. This was definitely showing me some profit. I'm going to say $350, $400 probably at the high end as we came back down here. I'd have to go back and look at the stream that was getting started. This was around the low. And but again, just on the wrong side of it, man. Here's the push up. Here's the breakout above pre-market high. Looking long, trying to find an area to get long right here would have been the play. So there we have it for today. I was long and I closed early. Yeah, man. Yeah, I feel that. In this market, these conditions, again, I talk about trade management quite a bit because it's just such a difficult one to master. There's not anything that works every day. You just got to find something that works, a good balance. In this market, I've been holding my trades too long. I haven't been taking profit when price is showing me profit. I've really conditioned myself to hold my trades. I find it much harder to do so. I find, taking the quick profit is always the easy thing. And I like to hold in pursuit of those larger moves, those bigger wins. But in this market that is a little bit rangy, you get these afternoon moves that just come all the way back down through the range if price is outside of, pre-market or prior day levels. Even in the morning, man, we really get some back and forth movement. So I'm more of a fan now of trading micros, at least right now, trading micros and scaling, or even minis, doesn't matter. Scaling in and out, scaling out and moving stop loss to break even, protecting, capital if you can. You didn't see me do that on that one because, again, I had a pretty conservative target in my mind. I didn't want to cut half the position at less than a 1-to-1. So the hold there was really just past a 1-to-1 to hit that target. But yeah, scaling out a little bit and leaving a runner, you can't really go wrong there. Sure, on the day where it turns right around and stops you at a break even, you didn't capitalize on the big win, on the full profit, let's say. But on a day where it continues to run, if you trail your stop loss and, price is still trending in that direction, you get to capitalize on that. So leaving a runner is not a bad idea. I would just always be considering trailing a stop loss. But yeah, if you guys got any questions, feel free to ask. That was my trade of the day. I know a lot of you guys are going to have missed that. I would hold my NYSE open 10 micros. Yeah. Yep, I hear you, man. I hear you. Yeah, if you guys got any questions, trading questions, feel free to ask. That's what the remainder of this session is going to be, man. I knew jumping on as I was in that one that would be the last trade if it went against me. Again, scaling up in size as far as risk goes on some of these accounts because I've got to make something happen. I got resets coming up on them, so I don't want to let a fresh 50K without me trading it reset without me getting real aggressive on it. So I got a little bit of that going on this week. But yeah, man, full week of trading. Be live every afternoon. Definitely getting some trading in. Again, like I said, got a lot of accounts, so I'll probably be starting fresh on accounts in the afternoon. Get some overnight swings. If you're not in the free Discord, hop in the free Discord. I would be surprised if I didn't have a trade on going to bed every night this week just for the sheer need of making something happen with some of these accounts. If the conditions really aren't right, there's nothing that's showing me. I'm not just going to arbitrarily take a loss, but I will look for some overnight swings for sure this week. I'll call those live in Discord, and again, I'll be live trading. Yeah, really nice reaction off of this high here, off this level. Excuse me, not off this high, right off this level. I think it's really likely to continue up. Again, I just don't know if we're going to see the move that I was looking for right down here play out, where we just come back down into the range. I've seen it so many times as of recent, but I can't deny the really nice bullish structure here, headed back up towards all-time high right here, prior day high. Right? If I zoom out, I'm not going to mess with the tick chart, but if I zoom out on the 30-minute, as you can see, here was the prior all-time high right over here in May. Here was Friday the 7th, all-time high, prior day high. That's what I got marked out. Back to the 5-minute. Let's see if we use these highs as support and we continue up. Let's see if we need to come all the way back down, kind of clear up some of this imbalance that formed. Maybe we come all the way back down to pre-market high before continuing. Maybe we don't continue at all. No way I was going to survive that at all, being short. My stop loss was way wide for the position that I had. Again, wanted to just give this thing room to breathe, to come back up here, but that is that. But if you guys got trading questions, feel free to ask away. Maybe we'll do a little bit of higher time frame analysis on the U.S. indices, just kind of take a look at where we're at. But I can talk about really anything trading related on this one, man. That was my trade. Not a whole lot of risk left on this at all. 500. Yeah. Yep. 48,284. That's going to be the maximum loss limit. So I'll probably pull a little bit of a YOLO with this one. Again, I've got like 6 fresh 50Ks that I haven't traded at all, that I have about a week to trade. So I'm going to have to... it's great. I got room to trade, got plenty of risk capital to take on within these combines. So that'll be fun. We'll try to make some stuff happen. As you know, if taking on a whole lot of risk or trading a certain way generated a great response all the time, we would already be doing that. So there's an increased risk of loss. You don't give yourself the necessary room to take losses or consecutive losses on the way to the wins based on your win rate, but you have more accounts to do it on. So it's kind of just spreading the risk across multiple accounts. 6 freshies with a week left. Yeah, man. Let me see. I think they rebill. So I'm on vacation. I'll talk about this. They rebill not Friday, but they rebill next week. I'm just traveling. I'm on vacation. I don't really go on vacation a whole lot. If I do, it's more like a weekend trip, and I almost always have my laptop. I get my trading in. Like I was traveling this past weekend. Was back in my hometown visiting some family. Running around with some babies of the family, which was wonderful. Thankful to be able to do that. But got my trading in on Friday. Worked with my guys. Got it all done. Was active in the chat. But for this one, I'm traveling, going all over the world. Going to be really, really cool. Excited about it. I won't provide too many details and dox myself. So anybody that wants to come and rob me can come and rob me. I'll leave it. I'll leave it at you can try. But anyway, I'm going to be traveling over the next 2 weeks. Let me just get right to the point, man. This week, I got a full week live trading every morning, every afternoon. Morning sessions private, as you guys know, with my one-on-one guys, and I reserve it for myself. That's the time that I use to work with anybody that wants to invest in themselves and work with me one-on-one. Afternoons, I'll be live every afternoon. Like you saw, trading pretty aggressively. Hitting a daily loss limit in combine or passing is going to be the goal. If there's nothing setting up, I'm not just going to force a trade for no reason, but I'll be putting on some risk on the ones that I do take. As long as I don't scale into slow and price moves without me, which I had happen a couple times last week, and even this morning I didn't get as heavy as I wanted to on the second trade. But yeah, I will be traveling the next 2 weeks. No live trading. I'll do my best to stay active in Discord in my community, but my response times will be delayed. I won't be answering every day. I'll be in different time zones. I won't have service. I'll be doing a lot of traveling, and I'll be away from the charts from a lot of it. I will, like I talked about, be doing swing trades, some overnight swing trades after the NYSE session closes, the swap over in the futures market occurs, and the 6 p.m. Eastern time frame opens back up. I'll be looking for trades to be holding through that Asian and London session. If I do have the opportunity, the downtime, maybe I'll look at getting some trading in, but I don't expect it at all. But with that said, I got quite a bit of accounts to trade this week, and if I have accounts going into that time frame, which I expect to do so, I'll have opportunities to swing trade them pretty aggressively. Not really aggressively. I'm just talking about risk-wise. If I put a trade on, I'm probably going to put $1,000 worth of risk on the whole max, daily loss limit. Maybe shoot for a little over a 1-to-1. try to hit the profit target, and either kill the account in 2 trades or pass it in 2 trades. That type of a deal. The trade setups themselves are the same. The approach is the same. It's just the amount of risk that you put on. I can trade 1 micro here. I could trade 20 micros here like I was just doing. There's an amount that makes sense for how likely you are to be blowing that account. If this is an XFA, I'm certainly not going to be taking on arbitrarily $500 worth of risk per trade. That does not give me the necessary room for losses that my system will absolutely take, and almost everybody's systems will take. You'll grow it or blow it very quickly. And if it's an account you respect and you want to reduce that chance or really almost eliminate it, you just adjust that risk. We talked about the equity simulator. You plug in your risk to reward, your win rate, and your risk per trade, and it's going to tell you your max drawdown and about how many consecutive losses with that win rate and risk to reward you can expect. And you'll know if you stand a chance at surviving with that account in the long run. Trading this way on these combines, I know full well that I will blow them on the way to passing. But again, that's just the entrepreneurial mindset that we talk about. I'm in a position where I can buy multiple of them. I know I can reduce the time frame it takes for me to trade to a pass or fail on some of these, although I haven't been as aggressive as I can be with the amount that I have. But it's kind of that, how much risk are you taking on in your total trading plan? Are you buying one $20 account and you're going to trade it for the entire month and maybe pass, maybe fail, maybe reset at the end of the month? Are you going to buy, go to another stream, 10 or 20 of them, trade them very aggressively and maybe fail, 3 or 4 of them on the way to passing one at a much more rapid rate? Maybe you end up failing more than that. Maybe you end up failing less than that, but you're investing that amount to get, your way to the XFA. Which, if you make it to the XFA and you make it to a payout, obviously, your payout's probably not $20, if you get it to a payout. So, it takes money to make money. Everybody's in a different financial situation. Everybody's going to approach the combine and XFA deal differently. And there's no wrong way in my mind to go about it. It just depends on your financial situation. If you are, if this amount of money, the price of the combines is very low to you, I think it makes a lot of sense. Stack up on the combines, trade them super aggressively. Don't waste your time. Get to the XFA, fail, half a dozen on the way to, claiming them. They rebill for very, very inexpensive amount, and and get going. I'm not suggesting you YOLO everyone for no reason, but trade them aggressively. Take on the larger amount of risk. You reduce the time that it takes to pass or fail. You have to recognize you're going to fail quite a bit of them, but it's just all about your financial situation. How much money you have to invest in doing this, and the time that you are okay allotting for that. So again, nothing wrong with treating them with the utmost respect. Buying one and trading it conservatively using an equity simulator. Trading micros, not intending to fail it ever, and take as long as it needs, as long as you need to pass it. That type of deal. Bruce Lean, math. You can preset what you want to lose. Okay, let's talk. Go into Trading View. TopstepX. I'm struggling with risk management without the auto calculator. Is there something similar, or is it manual? Math. Bro, Bruce Lean says math. So in what Marcus is asking here, a little gear in the settings, you can preset your risk. Yes. Damn, everybody getting smacked today. Yeah, man. Everybody got smacked around today for that saw. Not a super exciting day for me. Red day. What Marcus is talking about is in TradingView. When you integrate, like, let's say Tradeovate or another broker with TradingView, over here, you have a really nice way to structure risk. I actually really like it. If it didn't lag the way that it was lagging when I integrated TopStep and Tradeovate, maybe I would consider doing that again. But it's a way that you can set a predefined take profit and stop loss based on a tick amount of your entry, how far away, or based on a dollar amount. And it shows you the position size. So let's say I have one contract with a certain amount of ticks or the dollar amount, it will adjust. So it's really nice to predefine it. The way that I would do it, Bruce Lee made a comment. Yes, you can go into settings in TopstepX. You can set brackets with each order that you put on. A bracket is included in that order, a stop loss and a take profit, or I think even one or the other. I'm not sure. I haven't really messed with it. Yes, it's the bracket settings. I don't do that because my stop loss is not always going to be consistent. My risk, based on wherever I am with whatever account I'm doing this week, probably higher amount of risk per trade, like I was just talking about. But my stop loss isn't going to be consistent. It needs to go wherever it's going to go. So to Bruce Lean's comment, math, that's what I do ahead of time. I just do the math. I use my measurement tool. I click the shift key on my keyboard and I drag this out. This would be right over here. If I say, hey, a stop loss has to go above this level, I measure. This tells me the amount of ticks or the amount of points. I understand the value of a micro or a mini. Or if you're in the NASDAQ, a mini, for example, is $5 contracts. I know most of you guys are trading NQ, and you just do the quick math. You can also use a position tool, same thing. In TopstepX, it's kind of annoying. It's one thing I don't love. Like, they have these random little quirks. It doesn't show you ticks. It just shows you points. But understand the point or tick value for the instrument that you're trading, and just do the quick math. Before you hit enter with whatever position size, you should know where your stop loss is going to go, and very, very close the dollar amount that you have to put on in the market to that stop loss. I enter a position and then drag the stop loss out, but ahead of time, I know about how much I'm going to risk because, again, I measured it out and I did the quick math in my head. Or, no shame, like I'm not a math genius doing $12.50 times whatever the ridiculous odd number of ticks quickly that's changing. Just do it on your calculator real quick or on Google or whatever it is. I do scale into positions a little bit more, especially using the micros. It's nice and easy to do. So I can start small and then add as I go. But does it calculate per contract? I don't know for the bracket setting. I don't know how it works. Again, I don't like using a set bracket for my trading because, maybe I have a 4-point stop loss on one trade, maybe a 6-point. It's not going to be a drastic change where, unless I'm swing trading, it's not going to be a drastic change where, one is really tiny and one's huge. But I like the flexibility. I think it's very easy, the TopstepX tool, where you just put the position on and then you drag out the stop loss and the take profit right away. You click and drag. You can adjust it that way. They're very, very user friendly. No confirmations. I think it's super easy. I did like the trading view, calculating the risk on the side to your stop loss for the position that you're entering. It just is doing math for you. You could do it very simply in the calculator, man. And I would say, get comfortable with whatever you're trading and start to get a feel for the average stop loss size that you're trading with so you can quickly determine that. You should really, we don't have to be mathematicians here. I'm certainly not. It's one of the reasons I didn't really want to get into finance going through college. I just felt I wasn't good enough at calculus, and I wasn't going to be able to handle the math involved in micro and macro, which I took and did okay. But the baseline math that we have to do is valuing our risk per trade based on whatever instrument you're trading and whatever stop loss size you're going to have in points or ticks, is if there's a difference. Like in Dow, for example, 1 point is 1 tick. But you should know the value of the contract that you're trading and what one contract is at X amount of ticks or pips to your stop loss. If not, just open a calculator up all the time and be doing it. And eventually, you get comfortable with it. Okay, 50 ticks is my average stop loss. I'm usually entering with 2 contracts. You get the idea. I'll probably just need to start small and add to it. I can do the math just fine. And that'll probably help me read the market while having some skin in the game. Yeah, man. Scaling in is touchy. Scaling in is touchy. I think adding to your winners in profit, no brainer. Hard to do. I think it's a great move. It's really nice. Adding to your losers or scaling in while you're in drawdown, you're towing a really fine line towards bad trading. Most guys make the rule that is never add to a loser. But in this example, let's say you just start with 1 contract, drag your stop loss out, and you decide, hey, that's enough for me, or I'm going to add another contract, or if it's micros, 10 contracts or whatever it is, to get to the desired risk per trade. You should obviously have a risk management plan that should tell you your maximum risk per trade if it's not going to be consistent, exactly consistent, which it probably should be. If it's $500, do the quick math, have an idea of your maximum stop loss size, make sure you're not going to exceed that with your first contract, and then put that contract on, and then maybe add another one. Most of us, unless you're really scalping, in a matter of 3 or 4 seconds, unless you're really at the open, I don't want to say this, but you'll have enough room. It's not going to affect you too much in the long run, man. A couple seconds. We like to be exact. We don't like to have a lag. We need to enter when we need to enter. But scaling in like that, just from getting comfortable and not over risking with too many contracts, you're probably fine. So that's the deal. Again, micros are a good way to do that. I put my first micro trade on last week. I find everything to be exactly the same except for the dollar amount per contract. It's 1/10 of the mini, and I just trade more. I have more flexibility. So, maybe I'll stick with it, maybe not. Again, it doesn't really matter. If I want to trade less than one contract, that's my only reason for being on here. And I like to be able to scale in. I can start at 5, which would be half of one mini. 5 micros, and decide if the trade's going in my favor, and then maybe add in profit, or maybe it's it's consolidating. I get to add again. The downside, I saw guys talking about it podcast last week. You can get in kind of light and then not care about the position. It can move without you. There's that obvious, but it's just more flexible, risk management. On TopstepX, you can trade the same dollar amount in micros that you can trade in minis. You used to not be able to do that, which didn't really make sense to me. But it was if you can only trade 5 contracts on the minis, you can only trade 5 on the micros. So you couldn't really trade much at all on the micros, so you just kind of had to use minis. With TopstepX, they allow you the same purchasing power. So you can trade 10 times the amount, if you want to, of micros. Again, to equate to the same total purchasing power on micros. So maybe it's something to look at. I don't really have a strong opinion either way. But obviously, if you want to trade NQ and you're finding you can't reduce the risk to the desired amount that you want, maybe consider micros. I will most likely be trading the XFAs when I'm trading them, starting on micros, because I can reduce that risk. I can allow myself the reduced risk that I need to get started comfortably, building a buffer, and then you go from there. As far as I can see, the chart's been exactly the same. It's if I put them side by side, they're exactly the same. I don't know. Maybe they're not, but for me, it's been the same. And when I talked about micros, everybody was no. yeah. No, I know. It's oh, you're trading the baby stuff, or maybe if you're trading one micro, I just like it because I can scale in and out, and mainly for scaling out. I oftentimes will get into one mini, position moves, I'm at 1-to-1, and I go, wow, I wish I could close half of this. Or maybe I'm in 2 micros, minis, and I don't want to close half or all of it. I want to close, 3/4 of it. It's just more flexibility. Coming from the CFD Forex market, you had that flexibility. You had to do math. It was lot sizes, and you had to put, it's different for broker, the value, but you had whatever flexibility you wanted, so it didn't matter. You just put on however much risk you want. With the mini, it can be a little bit not flexible. Maybe you want to trade around 1 every time, right? You're comfortable with that risk in NQ, but you want to be able to close half the position. You can't do that. Micros allow you that option. Don't kill me because I have micros up here, guys. Again, I'll probably be trading minis tomorrow. I'm taking on a lot of risk. I don't really need to worry about it. I had, what was that position? a larger amount than just one. So, not a big deal. Not a big deal either way. I think people focus too much on the small stuff. Just like that late long smash. Yeah, whatever works for you, nothing wrong. Yeah, man. Yeah, whatever works for you, man. Again, when people say, "Oh, I trade micros," the automatic thought is, "Oh, you're trading with less risk." Doesn't have to be. I could be trading with more risk than somebody trading minis. Just recognize that it's the value per contract. If you're consistently trading with way more risk than minis, maybe you should just trade minis. But I just like the opportunity. I like the flexibility. I like the control. I want to be able to control my risk. I think it's nice. I can really hone in on an exact dollar amount if I wanted to. Better control my risk per trade. But for me, the flexibility is pretty cool. Again, whatever. It's like, it's like focusing on like the 5 minute versus the 3 minute time frame. Which one is best? And there's like whole discussions and chat rooms about it's so close, brother. You're focusing on the wrong thing. We should probably be having a different conversation. It's preference. Pick what works for you and just, trade with that. But you're probably not going to have massive success on one and massive failure with another. It's the same. It's very, very close to being the same thing, same data. So there's only so much we could talk about with TA. So a lot of times the analysis really hones in. But I find that a lot, and I was guilty of it myself. Like my Google search would be like, how is the 1 minute better than the 5 minute? Best trading time frame with, whatever strategy you're using. You're focusing on the wrong stuff, man. Don't worry about that. None of it is providing so much more predictability than anything else. Focus on yourself. Focus on your experience, your intuition, your journaling, your mindset. That stuff is gonna actually really impact your trading a whole lot more than whether you're trading the same position sizing, the same risk in micros versus minis, or on one time frame versus another, or the color of your candlesticks is yellow and blue instead of red and green. Maybe it helps with psychology, but that's just my opinion. So like Bruce Lee said, here was the retest, right back up to this level, and then all the way back down. Guys that were getting long are probably still alive with a stop loss below here, but this is not looking like a whole lot of continuation, right? 1, 2, 3, 4, 5, 6 red 5 minute bars. Couple of them where buyers tried to take it higher, but long wicks to the upside, and then back down towards pre-market high. Downtrend structure. If we look at this nice little tick chart, 100 tick chart. Just like that. Longs smashed. Yeah, man. Like the people who trade with the 7 minute and 23 minute chart saying, why would I want to trade with everybody else's trading? Who cares? Yeah, man. Again, I think it's important to find the things that work for you. Everybody has a preference. Our minds work a little bit differently. Experiment with some different stuff, and then settle on what works best for you. But I don't think those super duper small differences are really going to move the needle one way or the other until you've been in the game for a long period of time and you've already worked through all of the other important stuff. A lot of times guys are focusing on the stuff that's not important, and they could do a whole lot better focusing on the other things that are going to impact their trading with so much more force. Who cares, man? On a lot of that little nuanced stuff. There's a time and a place for it, and I'd say it's probably way later in the trading journey. Everything's important, but I think certain things are going to be more important than others. Like, do you have a nice, clear risk management plan? Are you able to follow that risk management plan? Do you know what your exact risk per trade will be? Do you have a limit on how many trades you're going to take? What is your trade management plan when you get into a trade? Will you move your stop loss up? Will you scale out at a certain position, at a certain point? Will you close before take profit? These are really important questions that I would argue a lot of traders don't have a clear answer to. Just me. Yeah. Yeah. Um, yeah, guys. So any other questions? I mean, this is a good conversation, but any other questions, feel free to ask in the chat. Otherwise, I'll interact with you guys. I'm not putting another trade on, as you can see. Daily loss limit on this combine, which is chained to two others. Not a wonderful day for your boy Zach here, but that's the risk that we put on, man. Got to have those losses. They're the expenses on the way to the wins. Really looking at the market, like how I'll journal this one. Again, talking about my trades, because I think that's important, right? Like if you're not trading alongside me or I don't have a trade running, I can talk about exactly how I trade, my strategy, my risk management, my approach, my trade management, and I'm telling you everything. For me, this first one, solid. I'm happy with this. I'm taking this L every day if it has to stop me out. Where I missed a decent opportunity was not flipping long very, very quickly. If I had to put a reason on why, which I really like to ask myself these hard questions, it was just really quick after being stopped out. I got stopped out right here. I would have been getting long right away here or right away here. That's okay to do. And again, it would have played out very clearly. That's my strategy. That's my approach. If I'm going to utilize this VWAP line based on the market conditions that I've identified for the day and what's forming right now, getting long anywhere over here would have been the play. I would have been fine with really any stop loss size that I had, and I would have taken this for however much of a win that I would have taken it for. Probably would have scaled out, if I'm being honest with myself and you guys, like I like to do. Probably would have scaled out of at least part of the position before pre-market high and then closed the remainder at pre-market high. And probably looked for a sell. The sell trade up here, first one, fine. I'm taking that one every day. Go back through. Don't take my word for it. Take a look at pre-market high and low and how those levels are used as support and resistance, how they come into play, how price reacts off them. Oftentimes, enough for it to be dangerous. If price pushes up pretty quickly in the morning session towards one of the levels, pre-market high or low, there's a nice quick reaction, a nice quick bounce off that. It's a cheap trade. It's aggressive. It's counter trend. I'm trading against the direction that price is moving, right? If I'm taking a sell as price is pushing up, but I like those trades. Taking this one every time, didn't play out today. Second one, not bad either. I liked it. I'm not really managing that trade any differently. Only other thing I'll say is on that one, I like it. I'm not managing it any differently. Am I taking it on another day? Maybe I'm just resigning myself to the fact that we've moved up. We sliced through the VWAP. We trended all the way up. Why am I looking short? I'll make that note for myself. Should have flipped long down here quickly. Don't marry your bias. Even if it's tight in between, it's only a couple minutes, a minute or two. Get ready to get long quick. Don't sleep. Don't go to journal the trade right away. Don't get shaken. And then here, do I want to be looking short? And if I am looking short, am I looking past the pre-market high for my target? But above the VWAP line, I thought it was pretty good, honestly. I'm probably going to pull that one again if I'm being honest, but looking at where it was, going back in hindsight, this could have been a nice buy, quick buy. Obviously, we're all the way back down to entry, and if you didn't take your quick profit, it wouldn't have played out too nice. But just looking at the data, break above pre-market high, pull back down, buys around this level are the play. So not bad trading overall. Market didn't agree with me. Didn't want to respect my level here or here for a short. It wanted to respect it for a long here very nicely, and it wanted to respect it once it got above for a long here. Both of these trades, I was just looking the wrong way on. And again, I probably say missed, and the only way I'm getting this one is if I'm not already short, so let's call it missed. But back all the way down, I think I'm going to see my trading idea play out. I just took the short, down here as we were coming down, and it didn't follow through. But all the way back down to pre-market high, let's see what happens here if we stay above or if we kind of trail back down into the range. My gut tells me that what I felt was happening based on the structure and development throughout the session that I've seen over the last few weeks, we might see play out, which is just come back down into the range, maybe even a later day move in the opposite direction that we've been trading all day. Not nearly enough for me to make any kind of move right now. Still looks extremely bullish. We haven't broken structure. We're above this low here. We're just testing pre-market high again, and maybe we just continue right up and we continue this clean structure. But all the way back down, as you can see, just straight red. On the tick chart, you'll see really clean downtrend structure. This is way more zoomed in. Maybe you like this, maybe you don't. I do. I like the side-by-side for sure. Helps with execution, helps with scaling in and out, making quick decisions. For me, for right now, maybe I stick with it. Maybe I go back to the 1 minute. I would say all the same things about the 1 minute. Zoomed in, helps for making quick decisions, scaling in and out. Lets you see a much more zoomed in view of the market. But this is pretty cool, the way that it is tick-based, not just time-based, the way that you will see a whole lot more bars print when price is moving. You can see just by the time scale, right, how far spaced out some times are. You could see that really demonstrated at the open. Like, look at the time that it took from 9:30 to get to 10 o'clock, that amount of time on the chart. And then look at the time that it took to get from 10 o'clock to 10:30. And then as it slowed down, 10:30 to 11, 12 to 12:30, a whole lot less bars printed. So kind of cool where it condenses that area of low volume and really allows you to see what's going on when there's trading being done, when there's volume coming in. So there's people that think 1 minute is super degen, but trading NQ, I've found my way to make it work alongside all the other time frames. Yeah. You'll hear people say the low time frames are for gamblers and nobody's making any money consistently trading low time frames. I don't know. I'd argue you're wrong, just objectively, with the people that I see, the professionals that I watch that have been doing it for long periods of time. Do you find hedge funds on 1 minute time frames? Probably not. But again, it's the same data. If you need to watch a 30-minute chart, that zoom out on the 1 minute. It's the same data. So whatever works for you. Risk is the most important thing in trading today. I was $200 away from blowing my combine. Now I'm $200 from my initial balance. Nice, man. I agree. Risk management, right? And that this is thanks to these lives in the Discord. I appreciate that, man. I really do. I'm really glad. Yeah, relaxing Zen. I know I mumble some of these, so I went back and watched a couple. Where I can improve, I think, is reading the chat if I don't have it replaying. So, relaxing Zen, which is a funny name, says risk is the most important thing in trading. Today, I was $200 away from blowing my combine. Now I am $200 away from my initial balance. Winky face. And that is thanks to these lives and the Discord. I appreciate that, brother. I'm sure it's thanks to your discipline and your plan and you following that plan. But I would agree with you. Risk management is the part that we can control. We can't control what the market does. We just can't. We have zero control over whether it's going to go up or down. We can control when we enter, when we exit, and we can control how much risk we put on. That's what we can control. That's up to me and you. I can have no risk on right now. I can have, 10 contracts on right now. That's completely up to me. And I can structure when I want to get out, how much money I'm willing to lose, where my target is in profit. That's what we can control and structure. So risk is extremely important. That's where a lot of the edge comes in my opinion. So I'd agree with you there, man. Same here on that combine. Me and the guy was talking about with the daily loss limit, I've dug out of the hole, locked it out, and a little bit over break even on the account. We'll take it fresh tomorrow. Love it, man. Very nice, Bruce Lee. Love it. Very, very, very nice. Lower volume, my man says, nice, Brucey. Lower volume summer months tend to cause this type of price action. I guess it takes less to move the market, so you get these whipsaw moves. Yes. So as we come into the summer months, for the guys that aren't aware of this, the market is cyclical. It has cycles. Traditionally, if you go back and you look at historical price data, this is something that you will see. There's less volume traded in the summer months. There's less volatility. There's traditionally smaller ranges as price trades throughout the session on the U.S. indices. It's not to say that we can't have a massive running day one way or the other. It's not to say that it's always going to be like that. I always like to preface it. Past does not predict the future. But in general, it's safe to say we may see a summer slowdown through the July and August months where price tends to consolidate a little bit more. We don't get as large running days, these big breakout moves. There's just less volume traded. The reasonings behind that, the way that it's usually described, everybody goes on vacation. There's not as much interest in the market. People step away from the desks. There's not as much buying and selling going on. There's not as much big money moving around. Not us on Top Step Combines, big money moving around. But who cares about the driver? Let's just talk about the technicals behind it. That's typically what you can see in the summer months. Slowdown. Same thing like saying the week in between Christmas and New Year's has lower volume, a lot of irregular price action, and maybe it's not a great time to be, trading aggressively. So that's that. But yeah, in the summer months, I'm still going to trade. I will take that into consideration, what I've experienced through past summers. Maybe I'm a little bit more aggressive on my trade management. Maybe I write into my plan. I'm going to scale out of half the position at 1-to-1 and move stop loss to break even because I've seen through my data and through testing and forward testing, back testing, a lot of my trades make it to a 1-to-1, but they're less likely to continue to a 2-to-1 or a 3-to-1 and a little bit more likely to come back and stop me at break even. I'm willing to take some profit off, secure some profit, protect capital, and maybe capitalize on the smaller move that we may see. Just some things to take into consideration there. I wouldn't say stop trading or anything like that. I'm pretty much, if the market's open, I'm pretty much always, trading. The only time I really don't like to trade because I've just had terrible experiences is right around the major holidays, like right before and after Christmas, New Year's, maybe like Thanksgiving or anytime there's a big break and the market's closed. Right before the market closes, right after it opens, and right in between that end of year, beginning of year deal. I typically, like last year, I didn't trade at all in between Christmas and New Year's. That was my deal. When the market opened up after New Year's, I think the first day I didn't trade at all. Just watched the market and jump back in. There's plenty of trading days. If I can identify some that just I haven't done great on in the past, maybe I just kind of opt out of those ones and, miss the opportunity on whatever big wins or maybe big losses that I would have taken. But outside of that, I'm trading. I'm not going to not trade in the winter or the summer or specific times. There's not that many trading days. This is what I do. So I'm going to be on the charts. I'm going to be looking for opportunities, and that's that. I was long on YM this morning. Got in one. Fair value gap too early. Price made a new high without me, but I think I should be fine tomorrow digging out of drawdown, looking at the original move. Yeah, man. Yep. I don't know if anybody watched. I checked in once for about 5 minutes. How did the Top Step guys do today? I'm gonna have to take a look for myself. If you guys don't know, Top Step is the prop firm that many of us trade with. They run a live stream as well every day. They have tons of traders on there trading live, and a lot of times you'll see them. Maybe it's a split. Some do well, some do poorly, but they have some great days, some big winning days, and they have some really rough days. And it's interesting to see. A lot of times, if you pay attention to a lot of different traders, the same market conditions tend to chew everybody up. They take the same types of losses. So I'm going to
fully under control.
I opened it up real quick. Now it looks like no positions for anybody, and they've got somebody in a long on NQ. So let's click through and see if I go back real quick, just out of curiosity. No positions. They Nick for a tick down 3K earlier in the day. MP down like $300. If I click through the live, yeah, not a whole lot. Pretty uneventful. Shows Nick for a tick was up 1,500 times 5 XFAs. So maybe he went from being up to trading a different account. So nothing super eventful there. Didn't watch today. No more resets. Didn't tune in this morning, but I saw the Hello Kitty AI skit on my shorts. Oh yeah, I saw that. That was funny. They did like an AI voice. They sent that email out today too. An AI voice of Roaring Kitty, like cursing out the owner of Top Step. It was kind of funny. Nick for a Tick is cool. Watched his ASFX interview last night. Yeah. I've been watching a whole lot more of Austin Silver's stuff. I think it's really great content. The podcasts and the conversations between the traders are really cool. And I saw some of that one as well. He seems like a really humble guy, Nick for a Tick. Again, I've only seen him on Top Step a couple of times. Don't know his strategy really or how he trades, but he shares a lot of his experience. The way that he's worked through how he's gotten to where he is now, and talked about the ups and downs. I just, again, there's so many guys where it's look at all the millions of dollars I've made. You can do it too. I turned $100 into $20,000. Somebody posted that that in Discord. There's so much of that, and you never ever hear those guys talk about ever taking a loss. If you do, it's very few and far between, and then it's followed up by, but look how much money I made right away. So when you get, I saw the Kitty short also, yeah. When you get guys, that show it live, that talk about losses, that talk about like really, tough times, big blowups, running stuff up, passing XFAs, live accounts, and then blowing them. I think like that was his story. I don't want to get it wrong, but I think did really, really well in combines, XFAs after he came over, I think from options. I can't remember exactly. And then got called up to a live account, took payouts in the XFAs, took a payout like a little aggressively, something like that in the live account, ended up blowing up the live account with Top Step, which is tough if you made it all the way from XFAs into live, and then to give it back. And then talked about, going back to combines and then working his way back to where he is now. So, just hearing some of that stuff, I think it's really cool. And to understand what went wrong, what went right, how they got there in the first place, how they got back to where they are, just helpful. Bruce Dean says he trades similar to Rips from what I've seen, order flow and options levels. Gotcha. Yeah. Okay. So that kind of like, really aggressive scalping style and utilizing order flow and a lot of outside information. Yeah, if that and again, maybe that's something for guys in the future. Maybe it's something for me in the future. I've talked about the footprint chart a little bit and being interested in it, but for right now, I'm just pretty raw price action and market structure with the candlestick stuff. A little bit of volume from the tools that I see, but I value the simplicity. I really do. But man, like you see Rips out there, like that's one of the other guys, big in the futures market, big with the prop firms, huge days, obviously very consistently profitable. And you hear him talking about like so much different information. In my mind, I'm like, first off, what is this guy watching? How the hell is he taking in this much information? And then how is he processing it and trading on really like small scale? But he makes it work. So, you can't argue with the results. So. Yeah, kind of. Where do we at here? 2:45 p.m. Eastern. Not horrible price action, right? Like we pushed up, didn't follow through on this move, came all the way back down within a point or two of the low, tapped pre-market high, and now we've maintained some bullish structure. Kind of struggling right now. It doesn't look super convincing. Like this wants to blast up through this prior high. A little bit slow moving. But yeah, not super exciting here for the end of the day so far. Difficult price action to trade for sure. Larger, larger price action. Being long, maybe if you didn't move a stop loss, but you would have had to been nice and quick to scale out, take your 1-to-1, 2-to-1, which you could have gotten if you structured your trade right. You didn't run a huge stop loss for no reason. If these levels are going to play out and you're going to take an aggressive trade, in my opinion, you want to give it enough room to breathe. But like on Friday, the one that I shared, if you're going to be wrong pretty small. For the most part, you don't need a huge stop loss. You get the move like this, the quick test, and then a push back up. That's what you want to see. If it needs to come all the way down, it's a different trade. Unfortunately, mine was a little bit too tight, playing off of the pre-market high or the prior day high. Add it on here. Yeah, I can't actually see the level. Oh, it was pre-market high and prior day high. I took the farther one up. Yeah. But tight enough stop loss. So, yeah, no, this would have worked out fine. I'm going to go back on that and say this would have been a very, very nice trade. There would be no reason to hold this for a long home run. If your stop loss was somewhere down here, you would have had multiples of that risk already. I probably wouldn't have taken it again as it came down here. I didn't. I definitely wouldn't have taken it again on a test of it, but it would have played out okay also. Pre-market high, man. Pre-market high, prior day high, pre-market low, prior day low, discretionary levels, zones based off market structure and price action. That's the bread and butter of my trading. VWAP line, and that's really what I like. So maybe some volume down here, maybe some horizontally plotted volume, so I could see the prior day's volume point of control. Volume for the area, session volume, horizontally plotted stuff. That's kind of nice. I do like that. I haven't been trading with it on my chart. Sometimes I do. You'll see it. I don't even have it on here because I accidentally deleted all of my drawings and indicators off of this chart and had to start fresh. But not that big of a deal. NQ broke that low. This low right here, Bruce? Out of curiosity. I'll just go check for myself. Yeah. Get rid of whatever that is. It's an anchored VWAP from something else. Yeah, man. Yeah, NQ with the moves, man. NQ is a little bit. We were talking about this. We were talking about this in the Discord. It's hard to overgeneralize, right? And I don't like to say NQ does this and ES does this, but in general, what I find I see out of NQ is a lot more of what people would call stop hunts or liquidity grabs, where price is trending and it cracks below breaking structure, but maybe below a low in an uptrend or above a prior high in a downtrend. And it can make it pretty difficult to find a good spot for your stop loss. If you trade it all the time and that's what you find it does, maybe you use that for entries, you use that for targets. And that's what took me a little bit more time than I thought it would, coming from NAS 100 and NQ in the futures market over to ES. I talked about that a little bit, where ES feels like it respects traditional market structure a little bit cleaner. It's not to say ES doesn't pull those BS moves, like I like to call them. Why are you coming all the way down low, below a low just to move higher? I get it. Stop hunts, liquidity, blah, blah, blah. It's fine, but it can make it difficult to structure your risk and place your stop loss and targets. NQ feels like it does that a whole lot more. It feels like even if it's going to respect the level, it's going to try to fake you out as best it can. It's not going to hit it. It's going to move back up quick. Then it's going to blast through real quick with a 1 minute bar, only to put a long wick in and then continue the other way. It definitely feels wicky. That to me looks just like a little bit different structure. Like today, again, I know the gentleman that I was trading with this morning, my one-on-one man, focuses on NQ, and as ES was coming up to this level, NQ was breaking pre-market high. So different structure, stronger in the morning. Now it's looking weaker if it came back down below this low by 20 points. So just a little bit different structure. right? Like, let me look at what this looks like. That's the one I wanted to see. Is this going to change my tick chart again? Change all of them. Not that different, but it did come down. Did come down. And again, we didn't push above higher. So, you know, we didn't crack this high. So a little bit different structure playing out on NQ today. That's okay. Do the scroll out. Again, if you're not aware, if you use, you know, the regular session VWAP, you know, from the indicators tab, it can kind of come out skewed if you don't scroll all the way back out to the beginning of that session. So I don't mean to make anybody dizzy doing that throughout the live, but that is what I'm doing. Yeah. So we'll see what we get for the rest of the week. Again, man, you know, just talking about where we're at for the week. You know, if you don't know where we're at with the market in general, I'll extend this out so we can look at the 5-minute and this chart. Look at the 30. This is the all-time high that we put in. Obviously, we had an area consolidation right here. Big wiki movement, all-time high, back down, back up into the range. We look like we're kind of headed back towards that again right now. We have no news today, very little news tomorrow, no red folder news tomorrow, and then we have the FOMC federal funds rate, the statement, and then the press conference on Wednesday. Big red folder news event. A lot of times what we'll see is in anticipation of that, low volume, low volatility, a lot of rangy consolidating movements. We didn't really get that today, as you can see on the 30-minute. You know, we pushed up, got above pre-market high, tested it, and you know we've maintained, you know, this bullish structure right up to this area that was tested multiple highs before this, you know, this one put in here. But so, you know, maybe we don't get that. Maybe we continue a nice move up. Maybe we just drift higher. Maybe we get a correction. But in general, just talking about what we've seen in the past, if we have no news and then really big news at a certain point, ahead of the news is oftentimes consolidating low volume, rangy price action, rangy structure. But we're gonna have to see. Again, obviously, this is the large, you know, the high and the low of this move. You know, the extremes of this range. These sets of highs, this zone, and really these lows would be another area that I'd be looking at. These lows here where we had pre-market low, I really like the way that lined up with this morning. You know, we start to get outside of this like we did, you know, like we have when we get above highs. You know, maybe we're in for some higher prices. We start to pull back down, you know, get below these lows here, get below this low here. We could definitely be in store for some lower pricing. You know, maybe we start to see a corrective move, a sell-off. Massive bullish structure, you know, if we scroll way out on the U.S. indices, as you can see, we've been in a massive uptrend. Obviously, this was a big pullback correction here. But as of recent, you know, especially through this, you know, really big, strong push to the upside. And, you know, what people are saying, you know, how it's talked about is we're at all-time highs. You know, we're dancing right around all-time highs. Didn't really need to reload much before we came back up and put this one in. Looks bullish to me, man. Looks very bullish to me. So I'm not going to speculate on it. I don't like to carry too much of a really high time frame bias. You know, we'll take it day by day. We'll look at pre-market. We'll understand where we are, you know, in the higher time frame structure. But better to not marry your bias because you don't get caught short on the low time frame here and not fast enough to flip long like me today. But if you guys have trading questions about my approach, my strategy, my Discord, anything trading related, feel free to ask. I'm not getting another trade. As you can see, daily loss limit on this combine was taken on the last trade that I had running. Stopped out on a short that was showing me some profit as I started this live. So we're going to chill out for the rest of the day and come fresh tomorrow. We're going to come correct tomorrow, as the kids say. Came correct today. We come correct every day. But we're definitely coming correct tomorrow. But if you guys got trading questions, please feel free to ask in the chat. I'll yap about whatever you guys want to hear. Feel free to ask. Use this time. When you get your XFAs to a nice point, do you plan on going back to trading some NQ or YM? Bruce Lean asks, maybe, man. Maybe. You know, I can't keep myself away from NQ. I don't know what it is. Maybe it's just like your first tool that you got used to on. You find yourself wanting to trade it. It's probably the volatility, the opportunity for gains. Maybe, man. Maybe. I do find on the 50Ks, the daily loss limit, the structure, the risk structure, it's a little bit tight. The use of micros does solve that. You can size down considerably. But maybe. I'm going to leave it maybe for right now. One of the things I talked about is coming from the Forex market and using higher time frame, trading on higher time frames quite a bit. Traded lower time frames as well. I was less of the belief that there was a huge benefit of focusing on one instrument, and that a trader could do very well focusing on with a large watch list and trading as they see fit across multiple instruments. May be true for high time frames, but when I really narrowed my focus completely to trading just one instrument like ES, as I have over the last few weeks, months, I think there is an advantage there. I really do. And again, I had a little bit of overconfidence because I traded NAS 100 and Dow US 30 in the CFD market. Came over, traded them in futures, so that's all fine and well. Saw a lot of people trading ES, slower moving, respects levels more, less of the BS NQ wick out movements. Saw the structure, did a little bit of back testing, felt pretty confident, and I noticed that there are some differences. It does move slower. It's almost shaking me out of a good trade near important levels because it's just moving so slow. Where if NQ's doing that, maybe I know from my experience, my intuition, hey, we're about to flip directions. This thing moves fast. Now it's moving slow. You got to get used to that. And then hey, maybe I'm expecting this deep pullback for an entry, and you just don't get that. And yes, it respects it. It trends tightly. So there's an adjustment to be made, and focusing just on ES. And once you start to make that adjustment, you really get comfortable. You really develop a relationship with that price action, with that market structure. So that's somewhat of a shifted belief that I've formed that traders, especially on low time frames in the futures market, are probably going to do best focusing on just one instrument, maybe just two, maybe three of the same like U.S. indices. So I'll probably come back to ES, maybe Dow, which seems to be in its own world these days. I'll probably come back to NQ, and Dow at a certain point. But for right now, I'm really hyper focused on just ES. I like that. The point was made to me a couple times. Like if you were sitting at a risk desk, for example, in the Forex market, you're not going to be managing all of the currency pairs. You're going to be, the Euro USD guy, and that's it. There's going to be someone else for gold. There's going to be somebody else for crude oil. You're not going to be sitting at the risk desk and managing all of those markets. You're going to be focused on one market. You're going to know what happened yesterday. You're going to know where you are in the higher time frame range. You're going to be higher time frame perspective. You're going to really understand the price movements, how news affects and impacts that instrument specifically, and you become like an expert at it. So just like trading with one platform and utilizing the same tools every day, you really hone your intuition, your experience, the feel of it, which is important especially if you're using a discretionary strategy like I am. So again, that's kind of my thought process on that. As much as I would like to be watching NQ every day and getting punished, just getting wicked out of great trades, I'm probably going to stick on ES for a while. I don't know that I'll say I'll never be back to trading NQ. I probably will at a certain point, but that's where I'm at for right now. The forbidden fruit is NQ. Yeah, man. Same here, especially for scalping intraday. I trade some other stuff, but those instruments, I'm going to be taking a higher time frame position generally. Yeah. Yeah, but no, like for example, I know Bruce, like you trade, UJ. There's 20 some odd other, main currency pairs you could be trading. There's a handful of majors. You're stuck on UJ. I'd say you probably have an advantage just focusing on that one currency pair. You get really comfortable with the way that it moves. You understand the size of movements between days. You can identify high volatility days versus low volatility days. You know the times of the day that it's moving. And you get comfortable with that and you just stick with it. Maybe one's not better than the other, but you develop your experience, your intuition on one, and you become better at trading that than you would, Australian dollar, US dollar, something like that. You're really selling me on ES. The 5-minute chart isn't as imbalanced as 30, so there are less opportunities to trade and more to hold. I don't know exactly what you mean. I'm not trying to sell you on it, but I don't know exactly what you mean there. I know that there's less volatility. There's less, quick movements. So there can be less like trading opportunities, less areas for entry. I think that's what we're talking about there on ES versus NQ. But it's just about preference, really. The risk side of things, being able to trade micros, I really don't have an argument for anymore, because if I could trade the same amount of position size on NQ in minis or micros, the argument can be made, just drop to micros and reduce the size to less than one mini, if that was the issue. It was the issue before, using Tradeovate with TopStep and not being able to trade the same purchasing power in micros as you could in minis. So that was kind of step number one. But I like ES, man. I like ES. That's what I meant. Yeah. 100%. You get a feel for how that specific instrument moves. Yeah, man. Again, a little bit of a shifted belief for me. Like, coming from Forex market, that was kind of the MO. You set your watch list. You know what you're looking for that week. Find stuff that's trending. Maybe if you're a trend following trader, and you end up trading a lot of different instruments. I was probably a little overconfident with that. And I think honing in on one can be very helpful. Really, if you're going to trade intraday every day on a low time frame, it's going to present opportunities. And the structure is probably going to be pretty close, right, between instruments. You don't have to trade 5 of them, Maybe you like gold and a US indice. Maybe that's like your deal. And you can, your mindset can focus on understanding both of those instruments pretty damn well. Maybe that's the deal. But for me, I really like to hyper focus in on one. If I'm taking an overnight swing, it's on the same instrument. I could draw out on a chart like today what price did. I'm going to know this going into yesterday. I really have an understanding of as the market opens. I know if we're only seeing price move in a certain range, this is low volatility compared to what I've seen based on, watching it every week, every day, for months at a time. I'm excited to have even more experience just staring at these charts with one specific instrument on one platform. As you get more comfortable on TopstepX. So there's something to be said for that, for sure. Like, if you gave, for example, if you gave Dakota from TopstepX, like, is he going to be able to make it work? Probably, if he can trade the same instrument, the same style, the same everything. But there was a reason, and he was talking about it, that, an MP said it, you don't want to change even the platform. Even if you have all the same tools, you still have to take it slow and get comfortable on that platform. Even if everything is like the same, quote unquote, there's differences, man. And it's enough to have, a learning curve to be able to get comfortable on. So there's something to be said for that. Sure. I prefer to dial in on one, but that's what I've always done. Maybe once I'm profitable, I'll be more confident and add to my belt. Yeah, add to my tool belt. But I know I can make my nut on one instrument. Yeah, absolutely, man. Absolutely. You know, again, I see professional guys like you look at Tom Hogard. He's going to trade. He trades, Nasdaq and US 30 essentially. It's Nas 100 and US 30 in the CFD market, the Dow and Nasdaq as he calls it. He trades both every morning. He trades two over London session, and that's fine. He just takes his setups on both. He's watching both. Haven't watched him or listened in on his stuff in a long time, outside of the book that I listened to on repeat. But there's professional traders that do that bounce around instruments, and then there's guys that you see that they're pretty much just going to trade like NQ or just going to trade ES, or they're going to trade one for like the NYSE session, and they're going to trade one in the Asian session or the London session, because there's volatility for that specific instrument. I think that makes a lot of sense to do as well. But different strokes for different folks, man. You can make it work a lot of different ways. I'm telling you what's worked for me, kind of where my mindset is with it. And I'd go out on a limb and say most guys would do well, especially early on, focusing on one instrument, picking one instrument, sticking with that the same way you pick one strategy, stick with that strategy, one strategy, not 17 different entries and exits and ways to manage risk. Simplify it, know what you're going to do, and become an expert at that. That's the deal. The market is so vast. You could trade so many different instruments, so many different currencies and pairs, and you can trade with so many different tools and styles. We could be looking at a chart that looks nothing like this. I could have a footprint chart and book map up here, and there's nothing like this, and you could be trading from that. So if the space is that broad, you do have to, or you probably should narrow in and become a specialist on your set of tools and the way that you're going to trade. You're not going to be good. It's kind of like, jack of all trades, master of none. You don't want to end up like that. So that's my belief for right now. And again, shifted a little bit, coming back into the really focused on US indices and kind of seeing an advantage of just focusing on one. Got some really nice results after I really started honing in on ES specifically. Comfortable with the risk structure, comfortable with how it reacts around levels, the movements, the relationship you build. You get a feel for it. Hard to quantify, hard to put down into numbers and data, but you can certainly feel it. You put me on gold, I'm not going to know what I'm looking at. I haven't been watching it. I don't know what is quote unquote normal. I don't know how the structure forms. Is the trading the same? Can you apply the same approach? Absolutely. You certainly can. Horizontal levels, support and resistance, market structure, price action, absolutely. But somebody who's been staring at the gold chart, like if I was a guy who just traded gold, I'd argue at this point, I would beat myself than this version of me swapping over right now. Just obvious. Yeah, become a specialist, man. Nothing wrong with that. That's what I'm doing my best to do. Yeah, man. Never got into gold. Really never got into gold. So, for my US regulated Forex brokers didn't have gold with leverage. I don't know if this was all of them or just mine, but mine specifically did not have like any leverage with gold. There was spot precious metals available, but it was like no leverage, or it was next to no leverage. So it really was an opportunity for me to trade. And then by the time that I was messing with the Forex prop firms and CFDs, I was more focused on the US indices. I just wasn't focused on gold. So a ton of guys traded it. I just didn't have the desire to open myself up to another instrument. I know it's super popular now. I hear that market structure is really interesting and provides really, really great ways to trade it. It respects, the way I've heard it described to me is it respects higher time frame structure, support and resistance, and traditional market structure really well. And that pushes through on low time frames, volatile movements that you can capitalize on. Maybe in the future something's out there for me, but for right now, it's ES. But yeah, there's guys that just trade gold. Tons of guys. Got a guy in the group. A lot of guys in the Discord that are constantly talking about gold. It's just gold, and you know, more power to them, man. You know, no harm in that at all. But yeah, just never got into it. Never got on the gold train. But if you're in here late, I'll give you my spiel. I'm not a financial advisor. Disclaimer alert, right? Where's Marcus? Disclaimer alert, Marcus. I'm not a financial advisor. Nothing you see here or I see me do is financial advice. No qualifications or certifications that would make me a financial advisor. Trading's risky. Most traders lose money. You're probably going to lose all or more of the money that you trade with. It's also important to read CFTC Rule 4.41. I should know this off the top of my head now. Make sure you read the full disclaimer in the description of this video and on my site, realdealfutures.com. Yes, CFTC Rule 4.41 about hypothetical or simulated performance, which is what we are trading here in a combine. These are sim accounts. Even the XFAs and where you can make real money are on demo accounts. There's not real money behind this. Maybe there's a risk desk managing it, but your orders are not going to market. So important to note that, guys. Outside of that, join the free Discord. Link is in the description of this video. Coming up on 300 traders in there. Grew quickly. I'm psyched, man. We're at like 270 something, 273. Can we make it to 300 by the weekend? I hope so. I think we can. 273. I love it, man. Growing quickly. We got more and more guys sharing analysis, sharing charts, sharing the wins, the losses, people getting funded, passing combines, trading XFAs, you know, blowing stuff up, sharing it all, man. So it's really, really cool. I love that community that we're building, really with all you guys. It's a group effort. So it's awesome. Live trading from me every day here on YouTube. Feel free to subscribe, hop in the Discord so you get the schedule, you get the link. Market analysis, like I shared this morning, talking about no news, shared the charts that I looked at, along with like 15 minutes of voice messages talking about everything from risk management to what I was expecting in the markets today, my levels, my zones, no gatekeeping, no paywall. Only thing I charge for is one-on-one. If you want to work with me one-on-one, multiple hours really per day, I charge for that. Charge for my time. Can't do everything. Can't work with an unlimited amount of people for free. I just don't have that time. I wish I did. It'd be really cool. But I will give you guys as much as I possibly can for free. You could ask me any questions you want in Discord, trading related, of course. I'll do my best to answer, you know, share my insights, share my experience. If I don't have an answer, I don't know. I'll tell you, I don't have an answer. I don't know. Somebody asked me what I thought about gold this morning. I said, I don't trade gold, but somebody else in here might have the answer for that. So would be happy to have you in the Discord community if you're not already, the Real Deal Futures community. I'll share this on here. I usually don't say it. Be on the lookout for scammers, man. I got more and more people using my name, especially in Discord. If you get messages on Discord, you know, from somebody using my name, or messages anywhere like asking for money or crypto or anything like that, be really, really cautious. Got some volatility coming into the market here. Big push up. Cracking above that high. Wow. Let's see this tick chart start moving, man. Watch how fast these candles start printing. Wow, man. No, that looks like it's lagging, man. That 5-minute chart looks jacked up. Yeah, we know. That was some wild movement on the 5-minute chart. Looking at that, the tick chart didn't even really display that type of back and forth, rapid back and forth movement. I don't know about that. Big push up and then continuation back down. So certainly looks like it. Not an enormous amount of volume traded if I just look at the volume down here. But that was some rapid back and forth movement there. If I was watching that 5-minute candle, that's interesting. Yeah, not a whole lot of follow through yet, man. Crack up above, back down to prior highs. Let me scroll out so I can get the correct VWAP line loaded on here for both of these. Yeah, no follow through, man. Buying the breakout is not the move today. Really not the move today. Where was I? Don't get scammed, man. I'm paying Zuckerberg now like $15 a month, a couple $100 a year for a blue check mark next to my name on Instagram, just to make sure that you guys know it's me. So I try to post the same thing without annoying everybody in Discord. Don't get scammed. They use the same profile pic and name. The username is really close, but they obviously can't use my specific username. So, go in the main chat, confirm the user that you're talking about. Ask me to send a voice message. Tell me you don't think it's me, and I'll prove it's me. I won't ever be upset by that. But the scammers are active, man. And as I grow, I know it's only going to get worse. So be cautious. Don't want anybody to get scammed. Use your head. Sellers didn't really, I'm staring at the chart now. Sellers really didn't follow through with taking this a whole lot lower. But we don't really have follow through the upside. Let's see if we get a reaction here. If it just needed to pull back to prior highs in the uptrend. It wasn't just this high here that we needed to pull back to, but maybe like this level down here or down here. I don't have a whole lot of conviction in the direction of this thing. But guys, I think I'm getting pretty close to wrapping it up here. Again, I don't have another trade in me. 320, ranging near all-time highs since last Wednesday. You think this is the same type of price acceptance at these levels to eventually go higher, or what do you see longer term on the U.S. indices? Great question, Bruce. Thank you. I'm going to jump out to a 1 hour here so we can look at this. For me, honestly, what I was expecting, this looked like the all-time highs we put in here, obviously, right? Cracked this high, pulled back down, and then we created a lower, some lower downtrend structure. Pushed up with a force. I was first expecting this to just continue higher. I thought this was the reload. This was the pull back down that we needed before pushing a whole lot higher. We didn't really get that. We came up here, put the all-time highs in, and then kind of quickly came off, right? We didn't and we did that a couple times. We didn't blast higher than this one over here, even with this pullback down and the continuation up. Maybe this is the run, and we're just seeing a little bit of a consolidation before, acceptance of higher prices. I don't know. I felt like we were, after we got up here, I was like, oh man, here we go. We're going to see it. And we just consolidated again right around this level. Came off a little bit, So I don't know, man. I don't really have a high time frame, strong conviction. I think we can easily see higher prices from here, right? We had our big correction all the way back up, higher high, pull back down, nice correction, reloaded for higher highs to be put in. We put it in and we've came off a couple times. We're headed back towards it now, so I do think a run is definitely a possibility. Especially, again, I don't pay attention to a lot of the fundamentals at all, but I'm aware of the drivers. I understand where some big shifts in policy can really open up the gates for higher prices or lower prices. We got one of those coming up on Wednesday, so I would kind of be surprised if we broke above and started running higher today or tomorrow. I would before the statement, before the rate comes out. But if we get something that really gets people bullish, I think, and we start to break above on that news, I think there's absolutely room for higher prices to be in store. And conversely, we get something that's restrictive, where it gets everybody looking south. We can definitely come off this. It's just this really interesting inflection point near these all-time highs. This to me, again, looked like the corrective move that we needed. Once we started getting higher and broke above, that we were going to be able to continue and blast through. Price doesn't just trend higher and then, usually in my experience, doesn't just trend higher and slowly hit a high and then kind of just continue moving without a corrective move. It likes to pull back down, reload for lack of a better term, and then blast off. It looked like we were getting that here, but not so much. Not so much right now. This could be the second correction again to just continue up. It absolutely still looks bullish. If you zoom out on the 4-hour, nothing about this chart really is telling me that we're getting ready to turn. We're going into a recession. We're going to see a huge correction here. On the low time frames, day to day, obviously, we got to go with low time frame structure. But right now, I'm kind of like everybody else, waiting for Wednesday to see what happens on Wednesday. We get a move that pushes up, doesn't just wick and come right back down like we've seen a handful of times. We get a move that starts to push and we get a run up. I'm absolutely going to be looking to ride that long. And again, conversely, we get a move that follows through to the downside, not just a quick wick down and then buyers, back in control. I'll be looking, to take that to the downside. I think it will be telling if we do get one of those moves where, the news is perceived as red on the technical side. We push down and then we immediately pull back up, and buyers just do not let prices get taken lower, even on whatever the rate is and however the statement goes, however the press conference goes, and the news later in the week, because there's more news later in the week. I think that will be telling. If we come off these highs, with some force, and we start to get below all these lows and maybe continue down, that could be an indication that lower prices are in store. Right now, to me, this looks like long America. I have to ask myself again why I shorted the market today, and where I would have been done going long on pretty much anything, and it looks like that's going to continue for a little bit. I don't know what we're going to get tomorrow, man. Again, I'd be kind of surprised if we just blasted off and continued above. Like people say, the news is always baked in. It's already in the price. It's already factored in, and the reaction is just the reaction. But I'm looking at Wednesday and the rest of this week with some red folder news at this all-time high, right near this all-time high level, as an important indicator of what we have coming up. For the rest of the summer months. Also, again, we could have this type of a deal here where we just get more consolidation within this range before we decide to go higher or lower. But that's kind of where I'm at. I don't like to do a ton of speculation on the higher time frame structure because I do trade the low time frames. I'm on the 5-minute and the 100 tick chart today. Usually it's the 1 minute. I'm really just trading off of the low time frame pre-market levels and discretionary levels, I mark the higher time frame structure up and I understand where we're at within it, so I can use that as a frame of reference, a little bit of a bias. But I try to stay flexible since we're on the low time frames. Some guys say it doesn't matter. I don't care. It doesn't matter if we're bullish or bearish. I'm just going to do what the 1 minute chart's telling me to do. I agree with that to a degree. I do like to know, hey, have we been bearish, red bars, none trading above prior bar high day after day after day on the daily chart? Probably important to know that. It's going to push through to the lower time frame. You're probably going to be better off selling. So, but yeah, that's kind of the deal. I think we're going to see some consolidation. Gun to my head, I'd say consolidation before the FOMC rate and conference, and whatever happens then, I want to see if we see follow through in the move. I don't care if we put an all-time high in, if we then just wick right back down into the range and kind of start trailing lower. I want to see what happens at the news event and then afterwards through that statement, and then even more so later in the week with the red folder news, because again, we get above with some force and we follow through on that and we keep trending without really, giving us an indication where it's just a quick wick up. All-time highs, man. Long America. We don't get that. We come off, we start selling off. Maybe it's lower prices in store. We will just have to see. But again, you get one of those moves where it's just a quick wick down, super aggressive bar or two, and then we're right back up into the high of day or pre-market high. That could be telling right there. That news is accepted. Sellers are not going to take control. People are, institutions, drivers behind it are going to maintain, this bullish move to the upside. So we'll see. It's also an interesting point that we are coming into summer at this time. Typically we don't see the massive bull market run or bearish, market sell-off. There's sayings that go sell in May and go away. Like, corrections are in store past the springtime. I don't take too much of that into consideration. But again, I'm aware volatility volume typically dies down over the summer months. So, that could be something to think about when you're forming your higher time frame analysis and really speculating, because that's what we're doing here. So that's my 2 cents on this, guys. It's my 2 cents. I've talked about this a bit. Again, I've really done best not marrying a bias coming into the trading day and just trading what market structure and price action is showing me as the session is opening up on the time frames that I'm trading. Know where I'm at, understand the levels, have them marked on the chart, but don't marry the bias that says, we're pushing up and it's long America, because you get caught day after day after day in a downtrend like this trying to buy, stuck on your bullish bias, and you're on the wrong side of the market, or vice versa. Maybe like me today a little bit, just looking to the downside too much. So that's my thoughts on higher time frame U.S. indices. Important stuff coming up this week. We had NFP. I think it's going to be interesting to see the reaction. I think we got, honestly, again, like gun to my head, it's just speculating. I think we're going to see consolidation before this. And then I think we got higher prices in store, man. And I think even if it comes out, comes out with a downside move, I think it would be really interesting to see buyers not let price fall off. What I mean by that is to see a big wick to the downside, an initial push down, and then a very quick correction back up into whatever range we were, previously trading in that day or the day before, and and a continuation back up into that range to consolidate. So that's my higher time frame analysis, Bruce. But now that we are at nearly 2 hours on this live stream, I appreciate you guys being here. I'm going to be live all the rest of this week in the afternoon, trading the end of NYSE session. I'll also be calling out swing trades in the free Discord. Hop in the free Discord if you're not already, so you can stay updated on the schedule, get the link to the live, subscribe to the YouTube, like the video if you found this useful. I'm on here nearly every day live, giving you as much information as I possibly can for free, answering all your questions. If you find it valuable, feel free to like and subscribe. If not, don't worry about it at all. As you know, not a financial advisor. Nothing here is financial advice. Trading's risky. Most traders lose money. You're probably going to lose all your money. Make sure you read the full disclaimer at my site, realdealfutures.com, and take a look in the description of this video for the links I just talked about, along with that same disclaimer. Guys, it's been great. Thank you for being here. Reading Bruce's comment here. Same here. All the pushes lower have been getting absorbed quickly. FOMC will be very interesting for the markets. I appreciate all the insights. As always, catch you in the Discord and during the next live stream. I appreciate that, Bruce. He's seeing the same thing that I'm seeing. It's been interesting to see the negative news come out, the quick downside reaction, and then the absorption and buyers bringing price back up higher. So we'll have to watch. We'll see what we get on Wednesday and throughout the remainder of the week with more Red Folder news. Again, if you want to stay updated in that, with that, I post it every day. Market insights with the forexfactory.com. Not affiliated, but that's the site that I use. Calendar that shows you what the events are, when they are, Eastern time. I try to keep you guys updated as best I possibly can with that stuff, so you're not caught off guard. You can structure risk. But again, guys, this has been awesome. Thank you for jumping on. I will see you in Discord. I'll see you here tomorrow.